Okay, guys, I think we're live, but let's wait a couple more minutes and we will start. Okay, I see there's already a couple people watching us. So let me know in the comments, can you hear me, please? Yes, okay. So 2 more minutes. I'm preparing the slides and we are starting. We have a tea for our discussion for today. The first question is this gonna be recorded? I don't know. But it's better to be on the stream. The last minute. No Russian, brother, no Russian. This is no point to speak on Russian. And the reason why, because all of the things what inspiring us in our post-USSR regions to do in crypto, they are firstly starting in the West, in Europe, in US, in Emirates, and there is nothing starting in Russia. So that's why we wouldn't speak live in Russia. But you're not gonna survive if you're not gonna know English. That's probably you will survive, but in your small Russian bubble. So that's the point. Last 30 seconds. So our stream today is gonna be about the last updates on DeFi Capital, but we will start firstly with analytics. I will have some recap for you from those analytical sources which I'm using to understand where we're going in the market. Then we will discuss our portfolio with the last public report on 235K. Then we have another one direction is the stock investments, and we will discover what kind of opportunities we do have there and where I already allocate first 5K. We will speak a bit about our methodology for the Llamalend, and we also propose a couple ideas what you could do and how you could hedge from the major correction, because it seems it's going to be very soon. I don't know, but let's firstly start with analytics. Our amazing background today in New York, in Manhattan, especially from Lisbon. And we're gonna start. Let me share the screen. So, from the current market situation, let me zoom in a bit so you will be able to see all of this. I think it could be more. The date is already changed. That wouldn't I wouldn't have time to change the date here, but this is the report for the current date. So what I want to say that our market statement that we are waiting for, let's say, a major dump or major correction, but before this, we might have some grew up, we might have some pump, and that's the main correlation with our portfolio because we do have 235k and more than 90% is in stable coins right now. We do have only one long on ETH on 9%, and that's it. But we are using leverage here, so instead of 22k, 60k right now. The point of all of this is described below. So what the sources I'm using to understand and operate my portfolio? First, you need to understand that I'm already sitting major part in a stable coins. I'm not trying to gamble this amount of money because we've been operating with this portfolio during last year and we are started from 100k. Even though I bought a car from this portfolio, so that's not the total amount. The total amount is almost 300k, and 3x is a very good result on such kind of experimental project with the public portfolio. By the way, what sources I'm using to understand the current situation in the market? So this is the total crypto market cap. You could find it on a CoinMarketCap or a CoinGecko, and I understand that we are right now hit the all-time high, and usually we have some kind of cycle correction after that. What also helped me to understand this is Bitcoin and the global liquidity index correlation, and we had a major rise just for last couple months, and this is a pivoting level where we might have some correction also. On the ETF trackers, we have the same cycles, and the point is that we are starting losing money, and that's also one of the points. If you could see what was from September to January 25, and then those correction when BTC cost 75k, and then next after that in May, July, June, and September we also have some inflows, but it seems like soon going to be the outflows, and this market cycle is fully depend on the inflows and outflows in the ETFs. So I'm kind of relying on that, but this doesn't mean that we wouldn't have some last, let's say, the final pump when we could have the at least the feeling of out season. So also what helping me to understand this fear and greed index. We are, let's say, on the supporting level. I don't like this word, but the point from this fear and greed index, it means that we still didn't touch the fully greed region. It also could lead to some kind of pump right now, but after that, for sure, there's going to be the correction. One of the interesting indicators is the US dollar index. And right now we are in a major pivot level with the risk on economy. Let's say investors are investing the money across the different industries. And this is also could lead to some short-term growth, but at the same time as a major pivoting level, and we could have a very big correction. On the liquidation map, we could see that this is the point where on the monthly time frame, there is a lot of longs and usually the market goes where the biggest liquidation could be earned. Then from the last 3 months, we had almost 90% of BTC supply being in profit. And there is also the chart which is going into the pattern, into the cycles from last year. Then I want to mention that we had the growing charts of the crypto held by companies, especially Bitcoin, Ethereum, and Solana. And Solana grew up very well. So there's almost the same number of percentage of supply held by the companies across Ethereum and Solana. Solana could be even more interesting than Ethereum right now if we will have this last pump. But what else I want to mention, that for the last week, this chart is sitting idle. So there's no companies buying ETH or SOL or BTC on the balances like it was before for the last months. Then, according to dominance, what could I say here? BTC and ETH, nothing changed, but that's what's called a bit of the feeling of the alt season. So some liquidity is going to alts, which is very, very risky. And according to smart contracts deployed on Ethereum, the people start deploying less smart contracts than it was even months ago. And according to our altcoins market cap, what I could say that we are reaching this top already. We reached it last time and we're reaching it again. It's very similar to me like it was previous time. The point is the market is changing. We are leading by the ETFs. But what I could say that from the very beginning, let's say from this point, or even from this point, or from that point, like it was in our portfolio, we already earned a lot of money here. And I personally don't want to risk with all of these amounts. And even if the alt season will be, and even I could have the upside to make $1 million from this 235K, this is not worth it in case if I'm gonna lose everything and will buy Aster or something like this on 235K. So I'm trying to be stick to my frames of risks and losses, and I happy to earn 10 or 20 more K from the alt season and then be prepared for the correction instead of putting less amounts of capital under the risk and be liquidated. So I'm seated here through the, let's say, the March dumps when nobody believes in crypto, and the people told that actually there is IE pivoting zone and everyone kind of forget about the crypto. But right after that, everything became more and more greedy, and right now on the market, I think it's going to be the correction, but we have a chance to see some short-term growth or short-term pump. That's my point of understanding the market right now, and that's the sources which I'm using to figure out what could be next. I want to say that this is actually my personal opinion on the market analysis, because every cycle we have a different indicators to understand where is the market will go and how the thing's gonna works. But sometimes we could find the patterns like in US dollar index or like the ETFs inflows and outflows, some global economy charts, and we could use those patterns to let's say create our own forecast to understand what to do. So what kind of questions do we have? Save the stream. I will try to save the stream, but it's gonna be better if you're gonna join and watch us online. Roman, thank you for the comments. So let's continue. Where actually I'm showing all of this analytics. We do have our platform. It's called DeFi Capital, and let me share the screen again. Because I'm a speaker on the stream and I'm controlling the stream. So what's the point here? We do have our platform. What it is? That's the analytical platform where we are publishing all of the reports that we have right now. And according to the analytics, you could find here all of these reports. That was the first one report. I already created a second one and I will release it. And that's actually the main source of the information which we are using to define how we are allocating our portfolio across the volatile assets and the stable coins. So going back to our portfolio, here you also find our portfolio reports. And this is the last one with those 235K. And our money today is sitting in following strategies. Firstly, we are publishing everything, and here you could find all of the things on chain with all of the changes, all of our earnings, and all of our losses, because not every time we are winning, sometimes we are losing. For example, like in portfolio report 5, under the 8th of March, we lost 73K from 165, and the value of portfolio being 89. Then we grew it up because of our strategy, because of the Llamalend using, and right now that's the point. So where our money sitting in right now, what's the structure here? So firstly, what we want to do, we are usually defining the portfolio forecast of the growth and failing. Means that if we do have 213K in stable coins, they wouldn't grow and they wouldn't fail. But the last part of the assets in portfolio is the long term. And here it could be the upside or the downside. Because I'm using leverage, the downside is fully zero. I could lost it forever. But the upside, even if Ethereum will grow up to 10-15%, I could get 2x, twice much here in a bull market scenario. So if this moment we will face some growth, gonna be plus 44, plus 30K. And that's our the risk framework, how we are understanding where the like our growth wins and fails and dumps according to our portfolio. And we're trying to fix those framework and see it and understand like, okay, if the portfolio will grow up, if we want a more earning, for example, we want a more 2 or 3x on the portfolio, what can the risk we will have, and our portfolio going to be put it under those risks. And it means that if we are fully able to risk on 235K, we are fully able to lose them. That's very important thing in portfolio management. You are not trying to win in the casino. You are trying to grow the grass under your management. That's the point. So going there, we do have all of the addresses here. You could check all of them. Sometimes I'm changing those addresses, so it's be better to subscribe. What we're doing first, we do have Rabbit TTH long on the Llamalend, and there is a borrowed capital for this long is a 40k, and we are actually paying interest for this long is 45 bucks monthly, and we do have an upside from here, especially because we do have this long position. The rest of the money are sitting in the stablecoin farming. This is USDF on the Pendle Finance, and this token is leveraged through the Sila Finance, and we have 120k here. Also, we still have some assets in our vault in Lagoon. It's 81k, and we have 12k just sitting in a CRV in the case when we need to save this long position if we will see another one major correction. So I'm trying to manage all of this longs by just allocating capital step by step to at least not going to be liquidated. And I'm okay to spend 20, 30k from the total portfolio of 235k to the allocating into the long term and creating a long on Ethereum. So this is the point according our portfolio. You could find all of the things here. Just go to DeFi Capital, log into your account and open the profile. And what we're doing here, there's mostly reports about the crypto and analytics about the crypto, farming reports also about the crypto. Everything is accessible for you. Here, for example, you can find the best sorted by us stablecoin farming opportunities. Going next, let's check the comments first. I see a lot of happy guys in the comments. Yeah, but this is usual. Hate, it's another marketing. So, going forward, the next topic under our discussion today is the stock investments. We created another one category here, and we are allocating funds from our crypto portfolio to the stock investments. The idea is to achieve 50k equity portfolio across the different sectors. So what's the point here is to collect equity and stocks in semiconductors, defense, batteries, and EV categories. So we did our first investment, just a 5k. It already grew up to 5k and 400 bucks. So just 400 bucks with still remaining allocation to deploy 44k, and this is our first portfolio report on the stock investments. The same fair case of the growth and failing and our framework here, because stocks is not so volatile. We could grow a little and we could fail a little. In terms of our categories, we do have just 2 right now from 5 of planned. We do have semiconductors, ISML and TSMC, and the batteries, ELP. Here you can find all of the allocations, and even we are earning $6 monthly from this investment because the dividends, because of the dividends from those stocks. So our target portfolio structure going to be 35% to semiconductors, because I personally believe in this industry is like everywhere. Chips are everywhere across all of the laptops, cars, microwaves, phones, everything with the chips. Defense, that's also one of the reasons why I'm not speaking Russian, because defense industry is growing. is 25% in our portfolio. Batteries and materials, another one 25%, and electric vehicles 15%. Total gonna be 50K. And to the category descriptions, so semiconductors, what we are looking for here is ASML, TSMC, and NVIDIA. And this is the major blue chips companies from the market. You can find all of them in the interactive brokers. And that's actually the platform what I'm using to deploy all of those funds. Risks described here, nodes also described here that I mentioned before. We're using IBCare, and the deployment plan going to be from 5 to 9K every month. It could be from our crypto portfolio, it could be from the funds which we are earning from the farming, and the goal is to achieve 50K. So report is done. You could find here all of the explanation and the base of our stock investments. Then the last point here, according to the new features, what we made. One of the questions here, are those reports only available for the pro users? Yes, those reports available only for the pro users, because we do have a subscription in this service, and that's actually the reason of existing of DeFi Capital, to combine everything together. And of course, they're going to be a subscription payment to get an access for all of this information. Another one point what I want to show you that we add last one, the best feature is a useful templates. And the first useful template here is how to open the long positions on Ethereum and Bitcoin on the Llamalend, with the full description and the breakdown of this methodology, where actually I personally earned together around 149K with all of the transactions on chain. So it's not just simple screenshots, everything proved here. And here we're explaining the methodology, what we using, why we're actually using the Llamalend. There's a couple of reasons. Many people already asked me in personal messages, like, why actually you need to use the Llamalend instead of perpetual futures. There's a couple of reasons. First, funding rate. Remember, we're just paying $45 monthly for our 40K in depth on the Llamalend. It's 4 times cheaper than you're going to use perpetual futures and going to trade on Ethereum. Then perps on Binance and the Hyperliquid, there is separated markets with actually, so this is perpetual BTC, is not the actual BTC, is no any connection to the BTC. And the only one thing what is doing the achieving the price equilibrium between the real BTC and the BTC on the perpetual futures is the funding rate. What this actually means, if the separated market, on those separated market, any price manipulation is much more possible and much more easy to do than on the real market, because you need less liquidity. And actually the liquidations, there's one of the revenue streams on centralized exchanges, not on the Hyperliquid, but on centralized exchanges there is. So I wouldn't recommend to anyone use Texas for the perpetual trading. Then the liquidations is a very painful point, and the Llamalend is more, let's say, you could create your leveraged position, and on perps you're going to be definitely liquidated, while on the Llamalend you will still have a couple percentage in your position and you're not going to be liquidated. Why? Because it has a soft liquidation process and deliquidation process. So this is another one reason. And Llamalend decentralized, and you could use actually Wrapped STETH instead of ETH and Wrapped STETH earning you 3% yearly, which is much more better and could lower your managing costs on those leveraged loans. But the problem of the Llamalend that if you want to trade on $1-2 million, there is not enough liquidity to do that. So 100K, 200K is okay, but $1-2 million, they're going to be very low liquidity level on the borrowed assets, because to put the 3x leverage on $1 million, you need to borrow $2 million. And there is a market, it works, but right now, no more than 100K, 200K, no more. Then we're explaining here all of our mental behaviors, what we're doing. We actually created a spreadsheet where you could just put your numbers and divide the position into different, let's say, different entry levels, which could help you to lower the liquidation price. Everything described here with the examples, with our methodology, with example of how to enter smoothly and how to exit. And you will also going to be able to ask me personally on book a consultation to open the position on the Llamalend or to understand how it works. And this is the category of the useful templates. The another one idea here going to be we will post a new template about the stable coins, how to do the leveraged looping to achieve 40 or 50% APR, and what you need to avoid, especially using Pendle Finance, because there is a drama with the PT tokens there. Yeah, so this is useful templates. Then let's see what's in our comments. I will have 2 topics more, and we will go to answer all of the questions. And talking about the inverting charts, so it's a regular chart. From where this question? Because one of the tricks how you could trick yourself. This is very funny. You could use inverted charts. Like you could see here, this is the red and green chart, but they're inverted to trick your brain, because you always want to buy on the green, and you could buy on the green, but you could do inverting on the chart. So I saw it a couple of years ago in our office, one of my friends, and that's amazing idea actually, to find the best entry point is to invert the charts. It look like a joke, but that's true. And then what else we are doing here? There was a question, a personal question, according to the portfolio reports and according to the stablecoins category here about the PT, SUSDF, and this leveraged looping, that we actually didn't earn this amount of money. It's less. And I'm going to explain you why right now. That was my mistake. I paying for this mistake with my own funds. And actually, this is the point. So we are here just sharing our experience and my personal experience. This is not a financial advice. If something going to happen, I personally going to lose the money. And we are in the same boat. That's the difference between me and the other guys who are just sharing the screenshots with you. I'm risking on my own funds and explaining you what I'm doing. And there could be mistakes, of course, because I'm just a person. So regarding to this question, let me share another one browser. What's the point here? It's actually related to Syntropia. Thank you. There was a question in the comments. What's the idea? What's the idea and what's the point? This is the position from our portfolio, which I showed to you in the PT USDF till 25th of September. Position being created months ago. We borrowed actually 121K. It's actually not this amount. We borrowed 120K. 1,300 USDC is our interest rate. And that's the main pain point, because the price of the PT tokens, let's open the pendulum. I will explain you what happened. So let's imagine a case. You are going to the Pendle Finance and you are trying to find the best yield on the stablecoin. It's easy because here is a lot of fixed APY and APR opportunities. You are choosing your stablecoin like USDE or USDF or TUSD or SUSDF, doesn't matter. The matter is that right now, for example, on the SUSDF, it's 17% fixed yield till 29th of January. The point that if the fixed APR will grow up, your valuation of SUSDF PT tokens will go down. And that's the point. So you will have some losses on your PT SUSDF while the APR and the fixed rate will go up after you're gonna open the position. Why it could happen? Because a lot of people wanna play with the UT tokens and buy them, because Falcon are incentivizing UT tokens with their points, and a lot of people want to get the airdrop, and this is the reason why actually the APR here could grow, and if it will happen, your position in short period of time will cost less than it was before. But on the maturity date, of course, everything gonna be fine. But before the maturity date, if you're gonna try to use some leverage through the lending protocol, like I did, it could be the problem, because I'm borrowing money, I'm using those money to buy more PT tokens, and after the APR is going up, I facing some losses. That's the problem of all of those looping leverage. But on every front end, we're seeing the net APR 57.5%. Bullshit. This is not true. This is not true because it showed for everyone, explaining that the fixed current yield could be 45%, then we could divide 33, and if you're using 3x leverage, in the end you will have 57. But the point is that for your loan, you are paying 33% APR. That's the one downside of using this leveraged trading things. The another one downside that your collateral could cost less than you start. And that's actually why I put it here, 36K into the USDC to compensate some losses, because right now it's 29% APR just on providing USDC on Silo Finance to the PTS USDF market. So that's the point, and you should be very, let's say, very curious about all of this leveraged things with the PT tokens. What's the best way and where the best way to do this? That's actually Aave, because on Aave you are borrowing not in the isolated market like in Earlier or Silo. You're borrowing from the multi-market, and here there is a lot of PT tokens of USDE, and you could do your leverage with general 6-7% APR on your borrowed amounts. That's actually what I'm gonna do next. But see, here is most of the time we have full of capacity till the mature date. So you need to find the right time to do that with Aave, because it's like 1 hour opportunity in couple months to stake and loop the assets through Aave. So that's the point, and that's the answer on the questions across the PT leverage at stablecoin yield with Pendle Finance and the Llamalend protocols. What I want to do another one useful template when I'm going to explain all of these things, how they works, and what you should do to avoid these risks and achieve the best yield. Again, everything proved on chain, and this is not the stupid screenshots. I'm using it with the connected wallets. That's a real one money. You could check all of them on the debug. And thank you for the comment. Yeah, let's do this. Let's do this again. Because I didn't add it on the stage. Yeah, this is it. So that's the problem, which I explained, that you could go to Pendle Finance, you could buy PT tokens, and let me share it again. You could find here the best stablecoin yield. You could buy the PT token, and you could use some leverage, like I did through the lending protocol. So, for example, I used SUSDF, and I opened the position here. But the problem is that in some cases, your PT USDF tokens could cost less than initial USDF. And that's the case when the APR of the PT token are going up, because a lot of people buying UT tokens to participate into airdrop campaign incentivized by the Falcon. And in this moment, you could very easy had some losses, even if the front ends of the Silo, Earlier, or Morpho showing you the best possible APR. So right now here is not 57. It's, let's see, I will be very happy if it's going to be 10. And the another one problem is your borrowed assets, because you're doing a leverage here. And with these borrowed assets, right now I'm paying 33%. And that's also another one very painful point, because in initial deposit, it was around 10% borrowed APR. I tried to compensate it with my deposit, 36K, to earn 29% on this 36K. But again, this position is not so profitable as they describe on the front ends. And that's one of the biggest problems of those looping strategy. And that's actually why people using Aave and using PT tokens of SUSDE. But here is the capacity. For example, here was a $1.8 billion, which are going to be filled in 30 minutes. And that's another one point. Why? Because on Aave, you are borrowing not in the isolated market, you are borrowing in the multi-market, and you're paying 6% for the USDT instead of 33 on the Silo. or on Morpho or on other lending protocols with isolated markets. So that's the point across this looping farming strategies. So what's next? The next point to talk about the Syntropia. It's been in our schedule, it's been in our plan. What about the Syntropia? We launched the hedge fund, and we already collect $1.5 million. So this is actually what we're doing. Let's say the DeFi capital is the solution for the retail users when you could subscribe to the reports across the crypto analytics, across the portfolio, across the stock investments. You could get some education, you could get some support on the stable coins, and actually education and the communities for free. Only the things where we are preparing the reports, they are paid. And that's the retail product. Then Syntropia, that's our hedge fund or a liquid fund where you could just provide your USDC and we will put them into the work. Right now is almost $1.5 million, 13% base APR and 48% projected incentives. So you could find this opportunity may be good for you, but from the one side is only 13% base APR, which you could take right now. 48% going to be after the airdrop. And from the other side, the main and the core feature of what we're doing here, we could protect your funds from the DPEGs because we made a security model which able to withdraw the funds from the farming strategies like I showed you on the Pendle Finance, on Curve Pools. And this is a very unique thing on the market because as I saw, nobody gave this security feature. We are using Lagoon to attract the deposits, and the same amount here. Someone already deposited 15K actually. But you could open the debunk and you could see that the same number of the portfolio is sitting here, and this portfolio divided between different strategies. It's only the stable coins, and we do have a different protecting scenario for the USDF stablecoin and for the ReUSD SCRV stablecoin. So that's actually what we're doing. We do have a roadmap, so going to be a couple more vaults, and we even have the boosted vault with more APR than we could give right now. And this is it. So that's the point. We don't have we didn't make any smart contracts. We're using the Lagoon for the account and then settlement. Then we're using all of these protocols like Pendle Finance and Convex from Curve and also Resupply. All of them audited. So we don't need to make an audit on our solution because our solution is just let's say a fancy custody which able to execute some automations to withdraw liquidity if we will detect some anomaly on chain. So that's the point. That's how it works. You could provide liquidity and you could get base 13% APR and also projected incentives in our token. As much liquidity we have, as low projected incentives we're going to distribute, and early liquidity providers will get more tokens, of course. So this is it. That's the point. And we are almost done. What I want to do, I want to check all of the questions, and maybe we have something fun here. Thank you, Roman. That's also a funny thing. So, according to our agenda, we go almost to the end, and there is no more questions. Thank you, guys. We're gonna make all of those reports, and we're gonna update them, and we will have those streams like that one. I think I would love to do them every week. Maybe we'll start bi-weekly because I will fly to Singapore. Some part of the window already that I will fly to Singapore, and right after I come back, we could make another stream with the crypto analytics and with the updates on the platform. So this is it. Thank you so much, and see you in our community and our channel. We will have more videos.